The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the weekly perspective for the week ending 15 April 2022. Well, this week I thought I'd do something a little bit different. You never know what you're going to get. Usually it's going to be about 15 minutes. This is part of the presentation that I gave at the 121 Mining Investment Conference in Las Vegas recently. One of the first charts I've showed during this presentation, I've shown several times through the last couple of decades, came from Forbes magazine. It's the real price inflation adjusted price of silver in $1998. So obviously those are 24 years old, but it is a constant, so we can compare apples to oranges. So as you can see on this constant silver price, the all-time high was in 1477 at $800 an ounce. But you can also notice from 1344 until, I'll call it 1564 in that range, we're basically at $300 an ounce or above. And if you drop from that point, I'm going to call it 1584, all the way to about 1784, we were above $100 an ounce. And then if you go from that point, 1784 to, let's say, about, I'm going to call it early 1900s maybe, we were at probably around $70, $80 an ounce. It's only been since basically 1900 or so, or really around the 1873, if you want to talk about the crime of 1873, when silver was demonetized, in that range here, then we've seen it below, $70 an ounce. And of course, down here, the reason this chart was printed in Forbes is where Warren Buffett bought his silver. That's why this chart was made, proving that it was an all-time low in inflation-adjusted prices. And that was, according to Forbes, about $473, under $5 an ounce. When I say there's just something not right about the silver market, you can agree or disagree. That's interesting is this chart showing what the 1980 high is on copper, lead, zinc, tin, iron ore, platinum, palladium, rhodium, gold even. And they're all above their 1980 high, where silver's sitting at about half the price of its 1980 high. Put a little perspective on it in silver versus gold prices from 1970 to 2021. You can see they're highly correlated, and silver sometimes leads, sometimes lags, but it has always outperformed up to this point. In the next run-up, I believe it will as well. And looking at a pie chart of the demand for silver, you can see industrial demand is over half of the market. Physical investment varies according to the Silver Institute. It's about 22%. You've got silverware, jewelry, and a very small amount in photography. I think this chart's important for those that have been holding on or not. And looking, and of course, we're picking a starting point that's advantageous to the metals. I admit that. I called the bottom September 2003 for silver and early 2000 for gold. And you can see gold in the gold color, silver in the silver color, and then you can look at the S&P and the Dow and see that over the last 2 decades, gold has outperformed the Dow, silver has outperformed the Dow, and the S&P. So it's only been in the last several years that the S&P certainly has rocketed up, and that's all we hear about, and on it goes. But from a longer-term perspective, through 2021, the end of, you can take a look for yourself and realize if you're not favorable to gold or silver, that's fine with me. I'm a free market thinker. However, it does benefit you, regardless of your philosophical outlook, to just do it common sense wise for portfolio diversification and to balance it and to outperform. Portfolios that have gold outperform those that do not in the long term. It's that simple. Bringing up this chart for the 3 inflationary waves of the 1970s, which of course most of you know I lived through and participated in. And I just want to show this because I think we are entering the third leg up now for this precious metals market. And as most of you know, I'm very fond of saying about the 90% in the last 10% of the time. And this chart doesn't show it exactly, but you can see that, the third leg up is usually greater than the second leg, although it doesn't look like it on this chart. And not always, but usually it is. And it's usually faster in time, and it looks like it's about the same angle of this. But regardless, you get the idea that we have one more leg up as far as I'm concerned, and it could be monumental based on the fundamental economic situation the world is facing. Taking a little bit of time, this is from BMO Capital and the Silver Institute. Silver deficit projected. Of course, we are here in 2022, showing, wag that at 20, 25 million ounces. But start going out in the latter years to like 2030, and you see like a 200 million ounce deficit. And when I sat down and started making notes for this week's weekly perspective, I thought all I was going to do was show this chart. And then I thought through and I thought, no, I'll do a run through of some of the presentation that I gave at the 1-to-1 mining conference. This is from Matt Watson. Shout out to Matt. Does independent research on all the metals, battery metals, precious metals, the exotics, everything. So this is his projection based on his research of the high case silver demand. And it's total silver demand. So if you break it down, I won't read every one, but you can see semiconductors, silverware, photography, jewelry, investment demand, automotive, the EVs in here, electronics, of course, even power distribution. So this is the projection, high case, and it goes from present day, or goes from 2010 to 2050, as you can see. So he also shows the mining and recycled amount of silver, which he has a constant. I'll get to that in a minute. And then just the mined here, also the constant. And that's around 850 million ounces a year. And with recycling, it's roughly 1 billion ounces a year. Okay. Now, first of all, I would say we don't know. First, that's the most honest answer. We don't know. But what we do know is that we've accelerated silver mining through mining globally, because 70% comes as a result of other copper, lead, zinc, and even gold. So other metals being mined produces 70% of the silver. Only 25% or so comes from actual silver mines, and even almost any silver mine is not a pure silver mine. It's got lead, zinc, and silver, or it's got copper, silver, or gold, silver, or whatever. So my point is that we may not keep this constant because of what's happening in the world. For example, what we learned recently about the zinc market being very tight, taking zinc off the London exchange, and the cost of smelting, is it worth it? Copper, of course, is hitting a new high. Most of those metals are, of course, silver isn't, but we are seeing a lot of demand. So this is, I'd say, the best case. I think we could get in a situation where we'd see less mining, not more, going forward. But that's just a point I want to make. So if you go out just a few more years, you'll see that according to Matt's work, we are eating up the above ground stockpiles because supply and demand always have to meet. And the only way to get to, let's pick a number here, 2030, where he's saying that we need, 1.2 plus billion ounces, and we're only mining and recycling a billion. We're in that, like the chart I just showed you a minute ago, a deficit of 200 million ounces. So what happens? Well, supply and demand always meet. So in the normal market, the prices increase, and the people that bid the price highest are the ones that receive the product, which in this case would be silver. If you go from 2030 out to, say, 2040, what gets more interesting is that we're still mining and recycling a billion ounces. And what if that's really 800 million? That would add another minus 200, but we don't know. So we'll keep it at a billion. But what do we need? 1.6 billion ounces. Well, that's 600 million ounces that's got to be taken out of above ground stockpiles. That pretty much eats up the entire ETFs. And it did it the year before that, just about, and the year before that, just about. So I would say from this projection, and I agree with it, I don't think it's 100% accurate. It can't be. But I think the idea is correct. I think the trend is correct. And remember, it's a high case. That if you're in your 20s, 30s, or even 40s, and you want a legacy investment that stood the test of time, I would consider silver. Are we going to see a big run in the next 2 or 3 years? I truly believe that we will. But if I'm wrong, it's almost inevitable that we will in the further out years. This chart is from goldsilver.com. Thank you, Mike Maloney and the team. This shows the silver real estate ratio, and it's declining, but still at historic highs, as it says at the top of the chart. I think what's interesting to point out is that in 1980, when silver definitely had its best run in real terms, you could buy a median-priced house for about 1,500 ounces of silver. If you go back to the 2011 or so, 5,500 ounces of silver. Now we're about triple that. Are we going to get back down to 1,500 for an average price home or not? I don't know. What I do know is that silver will probably outperform real estate over the next few years. This chart's from Incrementum. I think it's Rolle Stifle, if I got that correct. Sorry if I didn't. And others. You can see a lot of the data is taken from CPM, Will Towers, Swiss Mining Institute, Barclays. Anyway, the point is this. Look at the total global investment holdings. About 1% of total assets are in gold, and silver's pathetically small relative to that. It's like 0.02%. So the idea is that as the run to gold begins, it's an extremely small market relative to, the 50 largest global investment banks, the 10 largest investment banks, global pension funds, largest mutual funds, sovereign wealth funds, hedge funds, anything you want to compare it to, gold is underweighted. So if it just doubled in demand, you can imagine what the paper price would be. And again, I think that we will see a run to gold probably like we haven't seen ever before. That's my personal perspective. You can agree or disagree. And I've gone about 12, 13 minutes here. I'm just going to go a couple more minutes real quickly and close out this week with the weekly perspective. All right, so I am on the blog page, as most of you know. And if you want to get to our social media, if you click there, you get our YouTube channel. There you get our Twitter. There you get our LinkedIn. Facebook, we really don't have a presence. I think it's a corporate presence. We really don't do much there. But regardless, those three. And I just did another update on the crypto conspiracy with Michael McKibben. Very insightful, talking about the back doors into the crypto space. If you're not familiar with that, you might want to take a look at that. And lastly, I want to point out for people that there is a search bar here. It's not really great, but it's not bad. It will help you find stuff. I mean, I've done a lot. The team's done a lot of work over the years, and it's a way to check on things. So just put in silver investing, enter that. So what came up first is silver investing top 10 rules. It's a video. I did this with James Anderson, who, by the way, did a great weekly update for what he does for JM Bullion every week, talking about a couple things I pointed out on the zinc shortage and paper cover ratio of gold and that type of thing. So you just click there, you will get an interview that James and I did on the 10 rules of silver investing. And finally, I'll close it out with an update that came from LODE. I am an ambassador for this project. It's the second quarter 2022 update. A lot going on. Talks about the Q1 achievements, over $1 million in USD for the AGX and AUX coins. The LODE Payments International is processing in excess of 373,000 USD a month. Token minting. You can book a call to learn more. Talks about some of the team that's come on board recently. Talks about liquidity and how LODE is, I'll say it, kind of behind the leaders as far as liquidity, and we're aware of that, and we're going to fix that. And there is a new 16-page white paper right here that you can go through and see exactly what's going to take place, or I'd say proposed to take place. One thing we've been asked over and over is the new card program. There's a virtual card for not every jurisdiction. I've used mine several times. It works perfectly, but it's virtual. It's not a physical card. That's going to change. And the DAO, which some of you are not familiar with, a gold standard DAO, And finally, I'll just conclude. You can read this yourself. You can type in, it's on the medium.com platform. I think if you just type in load or load update, you'll probably be able to read this. If you go to the LODE.1 website, you can probably find it as well. And in closing, I'll just say that I did an interview with Nick Proughton on this situation, and we went through it verbally. You might want to see the video. It should be posted to our blog site probably within the next 3-4 days, and you'll be able to watch that exchange between Nick and myself as far as where the program is and where it's going to go. So I will leave this week's weekly perspective. This is David Morgan of themorganreport.com.